The last few weeks in the silver market have been pretty chaotic, especially Friday where it dipped over 30%. And prices are moving erratically and the swings are getting really hard to predict. But what happens right now isn't really so much about price, it's about liquidity and what happens when you try to sell. And the distinction actually changes everything. If you want to know more about how markets actually function under stress, it's a good time to hit the subscribe button because this is the part that you probably haven't heard about yet. So what actually changed? Over the last few weeks, refiners have started slowing intake, delaying payments, and tightening up terms. Some of the refiners are now limiting what forms of silver they actually accept. It's created a pretty big gap between pure bullion and 90% silver. Now, this isn't about a rule or regulatory change. It's a capacity and risk response, and it's spreading through the entire system, both on the buy side and the sell side. And this is the hidden piece that most people are missing: credit. Refiners rely heavily on bank credit to finance incoming metal. As silver prices rise, those same credit lines buy less and less metal. At the same time, banks are becoming more cautious due to the volatility and balance sheet risk. In some cases, credit lines are being capped, tightened, or basically frozen. Now, when that happens, refiners don't run out of metal, they run out of financing. And when financing tightens at the refinery level, everything downstream begins to feel it. So here's how the system normally works. Dealers buy silver from the public and send it to a refinery. The refinery assays the metal and advances cash to the dealer. The advance keeps dealers buying, and that flow is what causes liquidity, allowing the dealers to continue to buy with little risk. But here's the pivot, and this is where everything changes. Refiners are now backed up and refusing certain silver altogether. Refinancing costs and metal lease rates have surged. Cash advances are being reduced, delayed, or removed entirely. Now, prices aren't being set until the metal gets refined. And if the price increases, refineries lose out. And if the price decreases, the dealer loses. The risk is increased, but it's shared. Right now, money isn't moving until the process is completed. And once that cash flow stops flowing, the system reacts pretty quickly. Dealers lower bids or stop buying altogether. Physical silver becomes trapped in the pipeline. And volatility increases, and to protect themselves, dealers are offering less to sellers and increasing the premiums they're charging buyers. Now, this isn't a shortage headline. This is a plumbing failure. And when refineries stop financing metal, the market doesn't crash. It just quietly freezes. Now, this is why refineries are pulling back right now. Inbound silver volumes have surged in a very short amount of time. Hedging risk increases sharply during fast price moves. Processing capacity hasn't scaled to match the new demand. And as pressure builds, the risk gets pushed downstream to the dealers. Now, at that point, preserving liquidity becomes more important than growth. Here's what silver investors are feeling right now. The spread between spot price and buyback offers is widening. Some sellers are experiencing longer wait times to get paid, and dealers are becoming more selective about what they'll buy. Owning silver and selling silver are now two very different experiences. Most investors assumed liquidity would always be there when needed. Now, that assumption is being tested in real time. This exposes a blind spot that most investors never expected: exit risk. Silver didn't change, but the system around it did. Now, here's why this matters beyond just silver. Reduced liquidity shows up in the physical market first, but physical stress almost always appears separate from paper stress. Tight credit in the micro level resurfaces at the macro level downstream. It's the same sequence we've seen ahead of broader economic slowdowns. Once you recognize this pattern, it's hard to ignore. Now's a good time to take a deep breath and create a plan so you're ready when you are ready to sell your silver and don't get caught by surprise. I hope this quick video was helpful. If so, smash the like and the subscribe button, and we'll check you next time.